Hello, this is Jim White with Pivot Research and Trading Company. This is the second in a series of videos I am making showing trading applications of my pivot trading methodology and toolset for TradeStation. The first video, entitled The Stock Market Cash Machine, demonstrated how you could use the tools to day trade, taking daily cash out of the markets. In this video, I am going to show how to use the tools to swing trade using daily data. In swing trading, we look to hold a position for several days before exiting for a profit. The trade may last from 1 to 10 days, depending on market conditions, which we continue to monitor and evaluate. One of the key elements of the methodology is in using stop orders, either stop market or stop limit orders to enter the trade, and stop loss orders to limit potential losses. The market we will look at is the S&P 500 Exchange Traded Fund, SPY, SPY. It closely mirrors the movement of the S&P 500 index itself. Here is a daily chart of SPY in the June-July period of 2010. What you see on the screen is the daily price movement of SPY with the signals from the Pivot Trader toolset. Normally, the daily price range is shown as a green bar, like here. However, when certain conditions are met, my trend change warning indicator, here and here, will color a bar red or blue. If it is red, we can expect a high pivot to occur and a bearish reversal in price. If the bar is blue, we can expect a low pivot to form and a bullish reversal in price. The red and blue crosses and dots on the high or low of the daily price range are actually buy and sell indicators, and they tell us to prepare to enter a trade the following day. The green line you see running through price here is my reversal price indicator, which actually forecasts the price of the reversal in trend for that day. We only want to trade when price is close to the line. So let's see how all of this works. Here on June the 16th, we get a warning of a pending high pivot and a downward movement in price. However, price is far away from the reversal price indicator, so we don't expect to trade quite yet. On Friday, June 18th, we get a sell signal, and price closes below the green line. So we place a sell stop order on Monday at $111.33, which is 4 ticks below the low on Friday. Why do we place the order below the low? Because we want the market to take us into the trade, further confirming the reversal. On Monday, June 21st, after a higher open, the market begins to decline, taking us into the trade. We immediately place a protective stop loss order just above the high of the signal day, in case the market is trying to fool us, and as anyone knows who's been trading for a while, the market will often do that. But with this methodology, we have the statistics in our favor. The next day, the market continues to decline and closes at 109.41, giving us a profit of $1.93. At this point, we can lower our buy stop to our entry price or even lock in some profit. However, the market continues to decline for the next 8 days, and as it does, we continue to lock in more profit. On June 30th, we get a bullish trend change warning, and on July 1st, we get another buy signal. However, the price is not yet close to the reversal price indicator, so we wait. On July 6th, here, we get another buy signal, and price closes above the green line. So we are ready to buy. Our order for the next day is 104.41 stop, 4 ticks above the signal bar high. On July 7th, the market continues to advance, taking us into the trade, and closes at 106.11 here. It's been a good day. The advance continues for the next 4 days, giving us ample opportunity to capture a profit. On July 14th, we get another trend change warning, and if we have not exited the long trade yet, we can tighten our stops and prepare for another shorting opportunity. I don't believe in telling a trader when to exit a trade other than on a stop-loss order. Every trader is different and should set their own strategy for capturing profits. But these two trades have been perfect examples of the pivot trading approach. We can't always expect the market to deliver such profitable opportunities, but my research over the years has documented that this methodology will produce between 80% and 90% profitable trades if followed with discipline. This concludes the video on swing trading, but if you would like more information about the pivot trader methodology and toolset, or have other questions, please contact me at jwhite431@verizon.net. Thank you for watching.